Old Mutual, founded in 1845 in Cape Town. It's a global long-term savings insurance and investment group.
Yeah, it's got sizable assets under management, measured in British pounds, approaching 400 billion pounds. Headquartered in London for the moment anyway, although I've heard rumours that Bruce Hemphill, the new CEO, is thinking Cape Town is a nicer place to live than London. We'll have to see about that. Market cap?
184.9 billion rand, price to earnings ratio of 11.3, dividend yield of almost 5%. Let's just retrace a little on Old Mutual to the days when everybody thought that they were going to go belly up, and you could have picked them up at around about $4.50.
$4, Now look, they went overseas hammer and tongs and bought everything everywhere, Scandinavia, America, and those were the days where South African companies were heavily punished if they didn't go overseas. Now the total write-down, I can't quite remember what it is, but the total write-down in their global business must be approaching 20 billion rand.
So
doesn't sound like much today, but it was big in the time.
A huge lesson.
But they've sorted all of that out, as you correctly said. I wouldn't say they came close to bankruptcy, but they were on the skids there. They had to do the rights issue. They got more capital. They've essentially cleaned up virtually all of their problems overseas, and now, as Paul spoke about, I also think they're coming back to South Africa. What they do, whether they do a separate listing in London or not, who knows, but it's clearly on the cards.
Let's look at that share price and have a look at the performance that we are referring to.
Yeah, so that's not really actually too bad. They've sort of drifted. All of these stocks we'll see will have topped out mid-2015 when people started worrying that, you know, global markets were turning down a little bit. We had a very disappointing October, a bit of a tail off end of the year. This year hasn't started well. So people have started to price in those, lower expectations. And then, as Wayne said, the issue of their obligations here. But I think in London, Old Mutual is viewed as an interesting emerging markets play because they've got Africa, and they've got obviously Africa across the continent because they've got big exposures in East and West Africa as well. Management has positioned itself that way. It wants to be a disruptor. They've lessened their involvement in the US asset management business. They've sold lots of Scandia units, so they've done all of that. I think it's positioned well because it really does have enormous momentum. It gathers assets just through its enormous sales force and its presence in the market.
Is this one for the long term?
If
you're not completely convinced that the market is going to go up in the short term?
This is not a sexy stock. This is not a go-go stock, but you're getting it at a 5% dividend yield. Companies extremely well capitalized. Dividends shouldn't come under threat even if the economic situation deteriorates badly. And if we get a little bit of rand stability, a little bit of emerging market recovery on the back of possibly a higher commodity cycle, it's actually quite well positioned. So when you buy this company, you're buying at 5% dividend yield. Over time, that'll probably grow 7, 8, 9% compound over time. It's actually a good cash flow share. It's not it's not a go-go thing.
I think what you are saying there, Paul, Wayne, if we can just distill it, is the fact that it's a good dividend payer, and that dividend isn't going to come under threat.
It won't come under threat
if we see a tough economic
sometimes
cycle.
You want a bit of a banker for a dividend, and the life companies, they're very, very resilient. The issues, if the market goes up, which it could, who knows. You could actually do quite well out of it.
Why did we own Old Mutual?
We've sort of nibbled it over time. Back in the sort of early days of the hot stocks portfolio, we took shorter term speculative positions. But I guess it's really just been an issue of, it's a quality play, but we've had other things to look at. I know we're running out of time. We've got lots of stocks to get through. Wait. I actually want to ask one more thing of Wayne is we know that Nedbank, which is 50% held by Old Mutual, has sort of been rumoured over time to be potentially for sale. With today's news that Barclays is perhaps a seller of ABSA, well, Barclays Africa now, does that mean anything? Do you think that it puts it in play?
It's possible, but I don't know who's going to buy Barclays Africa Group. I just simply don't know. But it won't be one of our local banks. It's one thing wanting
to exit. You've got to find a buyer.
You don't think it'll be one of the local banks?
No, I think the Competition Commissioner will not allow that unless the environment has changed. Remember the last bid? Standard Bank, Nedbank wasn't allowed. So I don't think a local guy. Maybe the situation's changed, I don't know. But I don't think a local player.
We haven't heard those rumours surfacing for a long time. It looks as though Nedbank's quite neatly situated in that Old Mutual portfolio.
Look, at the end of the day, the whole bank assurance, life assurance, banking tie-up hasn't really worked, to be honest.
So you think it's still on the cards to get rid of it?
It's possible. Look, it's a good investment and it's very cheap at this price. Whoever's selling Barclays at this price just hasn't thought about it properly, to be honest.
I agree.
Yeah.
Hot or not?
I'm going to be hot on Old Mutual. I think I'm positive about the market outlook. That's the other thing. So
Yes.
my view is that they've sold off too much.
Positive hot.